Welcome back, everybody. My name's Josh Parker. So today's topic, we're going to talk about, is the market going to crash? Are we just at leveling out? Is it in a bubble? Is that bubble going to burst? What happens if interest rates rise? And many of you out there are thinking, well, I'm just going to wait until it crashes. That way I can save $40,000, $50,000, $60,000 on a house. So let me know if you're one of those people below in the comments. Let me know what you think the market's going to do. So make sure to hit that subscribe button, leave a comment below, but we'll jump right into it. Today's topic is all about, will the market crash? Are we in a housing bubble? What happens when interest rates rise? When will they rise? So, reading a lot of articles out there. There's an article by Forbes that talks about the housing boom flattening out in 2022, possibly early 2023, when the mortgage rates start to rise. So, what does that do for you as a buyer? Well, we're going to run through some numbers here in a little bit, and it'll pop up on your screen, some examples of what raising the interest rate does to your payment, what that looks like on the same home, what that looks like with a cheaper home, because a lot of you are banking on a market crash, the bubble bursting, and saving a bunch of money to purchase that home. So I'm going to give you some examples on why that's necessarily not a great idea. Now, are there going to be some deals out there at some point? Absolutely. But if interest rates rise, that means the amount that your monthly payment is also rises. So that $2,000 payment is now $2,500. You're not saving much. At the end of the day, you may save $50,000 now, but over the life of a loan, you're saving a lot more than that just by a 1% difference in your interest rate. What caused the boom? Well, as we know, that tricky thing called COVID that keeps rearing its ugly head over and over again has caused a major influx of people wanting to buy homes. Caused frantic buying, people bidding way over asking because there wasn't enough supply for the amount of demand. New home builders couldn't keep up with the demand. And as they're building, then they have the lumber shortage and all these other trickle-down effects that caused them to slow down production. It also in turn made many of the new builds become bidding wars because that's what the rest of the market was doing. And that's an ugly transition that we saw happen throughout this COVID period, or the housing boom, if you will, and the influx of buyers versus what was available on the market. Now, because so many buyers were looking to get into a bigger home or a new home or just a home altogether because maybe they've been renting, it was the perfect storm that created this deal to where everybody wanted to get a home. There weren't enough being built. There weren't enough people wanting to sell for the uncertainty of the economy, what the world was going to do. And so prices skyrocketed. They jumped up. People, especially here in Austin, bidding $100,000+ over asking. And it created a frenzy. So yes, while the median home price did go down last month compared to the month prior in the Austin area, I don't expect prices to continue to fall. Now, as things develop and things keep moving on, that price is going to stay relatively consistent, and we're not going to see the way over asking prices because it's leveled out to a high extent. People are either into a home or they're trying to figure out, because they're working remotely, where they want to go. And as you'll see in a video here in the next couple weeks, with Samsung coming in, we're going to see more housing needs, especially if they announce that they are going to move to either Austin or Taylor, Texas. We're going to see those areas pick up another boost of energy in the housing market, because it's expected that 1,800 plus jobs will be coming. Tesla is just about complete on their project in the next 6-8 months, and it has room for a lot of folks. So the Manor, Hutto, Pflugerville, all these areas on these outlying city of Austin are going to see another influx of people wanting to get homes, move closer to work. And so if you're on the fence about buying right now or waiting till the quote-unquote housing bubble burst, let's jump in right now, take a look at what interest rates rising versus saving $50,000 can do for you right now. So as you'll see on the screen, we'll take a house that costs $350,000. Conventional loan, 10% down. Right now, 3.25% interest rate, 30-year note. Your payment's going to sit there at $2,381, principal, interest, taxes, and insurance per month. Now, let's say you wanted to wait till this bubble happens because you think you're going to save $25,000. So now we're, however long it takes for this bubble to burst, you've saved $25,000 on the house. Now you've purchased it at $325,000. Same 10% down. Now the interest rates have gone up to 4.5%, which is very likely. It's all over the news. Everybody's talking about interest rates rising and getting up into that 4 to 5, even higher range. And so now that same 30-year note is $2,420 principal, interest, taxes, and insurance per month. So not only did you not save money every month, you actually upside down by a little over $40. Now the interest that you're paying is a whole percent, 1.25% higher, which means over the life of the loan, you're spending thousands of dollars extra, to where sacrifice that $25,000 up front, get into the home that you want, not have to wait, get out of the apartment, get out of the rental, whatever you're in, at a lower interest rate. Over the life of a loan, you're saving so much money, and you're making that $25,000 back. Now also keep in mind, with saving that money, you're also gaining equity. So that time that you're not purchasing that home, the time that you're not gaining equity, you're losing money that you're making at the back end when you decide to sell. Whether that be 5, 10, 15 years from now, that equity that you're building by making those payments now, along with the lower interest rate, you're going to save a ton of money. So at the end of the day, whether the housing market crashes, the bubble burst, or it doesn't, it's always wise to take a low interest rate, because you're paying back less to the bank. You're paying back less to that lender. So I hope this helps. Hope everyone has a great weekend, and we'll see y'all soon.